we're back to one of our oldies, but one of our better and favourite shots. Sydney is still there, by the way. The reason I'm not filming Sydney is not because it went into lockdown and, went subterranean. It is still there, as is New South Wales. Everyone in New South Wales now is in a 5-kilometre bubble, and all I can say is just invest as much energy as you can in that 5-kilometre bubble, and then come out of this a little bit stronger on the regional, national, global scale. All sorts of challenges beset people from various times. This isn't that tough. It is tough, but a lot worse things could happen, so try to make the most of it as best you can and lift those around you up as well. For all of our global clients, of course, this is slightly a little bit far away and a little bit interesting and curious that we're doing all this with such low case numbers. But the reason we're doing it is that I'm worried about wind noise actually. The reason we're doing it is because we didn't have that first wave. We don't have that any level at all of herd immunity still. So we're going to be looking at a situation where the Australian market the Australian economy could be in lockdown for a very extended period of time. If not in total lockdown, the Premier today said it could be the case of various styled restrictions ongoing until cases are much lower. She said at around 400, 500 cases, there's still going to be ongoing restrictions, even if there is 80% vaccination. On to markets. US markets, they always do this marginal little new high and then they hesitate and fall back a little bit signs of price rejection, but nothing too serious for the US indices. The Australian market had a fall. What's really interesting about the Australian stock market today, well, the AUS 200, lots of individual stories going on, of course, but the AUS 200, it did try to do that usual bounce back. We don't care about lockdowns. We don't care what's happening. We're just going to buy anyway. So the initial sell-off on the news over the weekend, and then a bounce back, and that bounce has been faded very quickly. I think that's a very worrying sign indeed for the Australian market. I think hedging Australian investment portfolio at the moment is a very advisable approach to the market. The Australian dollar looks like it can just collapse, fall out of bed basically at any moment yet again. I think we'll put a red light alert on the Australian dollar at this stage. We've certainly got the amber going for the Australian stock market, verging not quite to red yet. I talked a little bit about green and red and amber today in the written report. I hope you'll see that on the website, acy.com. So that's the equity markets. The economics, we saw data in the US. Consumer sentiment in the US has dived to the worst it's been since this whole COVID situation enveloped. Remember I said the US economy would roll over. Well, now it's looking very, very bad. It's looking quite dire actually, but no one wants to talk about it. So I think US stocks, good reason for them to be stalling out a little here. China's economy, much lower data today, outcomes across the board, retail sales, fixed asset investment, all lower, all the data is lower, but that's to be expected because it was still above normal pre-COVID rates of growth. So those growth rates dropping back towards, still not yet down to where they were pre-COVID, and I think this is just a normalization of the Chinese economy and nothing to be panicked about, as some are doing. I think often in the Western press, there's a little bit of negative bias towards China, a little bit of a positive bias to the US. We're trying to just see things as they are, and I think it's the US economy, certainly on a COVID basis, in more trouble than the Chinese economy. And going forward, the very sharp, strict reactions by the Chinese government is going to do a fair amount of controlling of the Delta surge that's happening there as well. Around the world, I think we're seeing people learn to live with COVID a lot better than they did in the past. That doesn't mean, learning to live with COVID does not mean that their economies are going to be super strong. It just means they're going to be able to run along at near where they were before. Still think the US dollar is going to be strong. Still think you buy gold. I think gold can have a run when no one expects it. So you need to be sort of small long gold all the time. I still think similar reverse story for oil, that oil will have a big correction on the back of, yes, global growth's recovering, has recovered in some places, but oil demand and continued supply chain disruption means it's already well overpriced. So I think we can expect to see oil to fall, and we've certainly seen that happen from time to time. I expect more of that. Otherwise, I think things are in a way kind of calm, but we get the calm before the storm. So I would keep a watchful eye on US equities. Price action still just bullish but tiring. And I would be very concerned about Australian stock market, and the Australian dollar situation could become diabolical at any moment. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.